Hi, welcome to the Invest in Value channel. I'm Victor, and in this video, I'm going to be looking at Robinhood. This is a stock that I started to invest in 2023. It's a smaller company. It's a pretty interesting company in a lot of ways. I'd love to tell you about that. And I'd like to tell you of the reasons why I put a small bet on Robinhood. It's really paying off so far, but I think it could really be a substantial investment for me, assuming that Robinhood continues to do the right things. Let me tell you more about Robinhood. I try to follow the same process as I invest in different companies, even bonds or even real estate. And the process being really looking at 4 criteria and then one decision. The first criteria is, do I want to own this company? Do I want to be in this industry? So is this a company and industry that I want to hold in my portfolio? Second question, is the company operated and performing well? Is debt less than 3 times EBITDA? Therefore, low debt, company's solid, they're not going to have debt issues and go bankrupt. And I want a discount on the stock. I mean, that's why we invest. We invest so we can make money. We invest so that over the long haul, our investment has really grown and multiplied. Based on the answers to those questions, I make a decision: would I buy, hold, or sell that stock? What's the story behind Robinhood that I believe is worth investing in? And the story is simple. This company is doing it differently. They're catering to probably the younger investor, and that younger investor is probably not liking tools that the traditional financial services companies, call it Schwab, Fidelity, not to pick on those guys, but frankly, those tools were built for, 50, 60-year-old investors, maybe 70-year-old investors. I'm 54, so, I'm happy with the traditional approaches, but I would say the younger investors grown up with, a lot of social media, a lot of access to information, fully connected. So Robinhood is going to cater to that next generation of investor. And I would say that they're hands down beating everybody else in the brokerage business and so forth. They're also extending into other parts of financial services and doing it well. They are really growing their deposits because they have a very attractive, interest rate that they pay on cash reserves for their account holders. They're doing a 1% match on a 401k plan, no employer match required. Very innovative. So, and they also have a membership program. If you are a Robinhood Gold member, you pay $5 a month, but then you get all these additional benefits. So they're really changing the way financial services and fintech are operated. And that's the reason why they're worth considering as a company for me to invest. Is, Google did it a different way, and look at them now. There's companies that came in, Tesla came in and did it a whole different way, and now they're dominant in their industry. So when these companies come in, if they have the wherewithal to continue to grow, they will be a significant market share holder in their industry. And I don't see anybody out there in a position to stop Robinhood. Really, their success is in their own hands. And if they continue to grow the number of users they have, I think they're going to be unstoppable potentially. So I'm taking a look at their May performance metrics, just pointing out a few things that I think are good to know. First, the total cumulative funded accounts, just grew a little bit, but the monthly active users has gone down. So that's interesting that accounts did grow, but usage is going down. A lot of negative out here. I think crypto, there's kind of a small crypto winter, although Bitcoin's been bouncing back quite well. Here's one number that's just grown, is number of deposits. And I think because they truly pay a really good rate of return on deposits. The other thing that I wanted to point out is they are, they're kind of like the younger investor, platform. So you can see why options are really a big growth factor for them, because the younger investor is willing to invest in options. And Robinhood makes a lot of money on that type of options trading. So that's really interesting to see. A couple other things. They're going to come out with a service, or I should say 24-hour market trading. That's a great idea. I find myself, sometimes not having access to the markets just because I work or I'm really busy. And sometimes, it'd be nice if I could be an investor at 9 p.m. Pacific, but that's not possible. So if Robinhood's able to really innovate there, again, they're going to lead the market. This tiny little company is going to lead the market of financial services and brokerages. So that'll be interesting to take a look at. Other things that they're doing, I mentioned, the Robinhood Gold, the membership program that they have, that's innovative. So really interesting things that the company is doing. Now, Robinhood is losing money. If you look at their P&L, they are not profitable. And I think it's going to be some time before they turn profitable. You look at their balance sheet, it looks great. They have a lot of cash and they don't have any debt, which is a very good balance sheet. Their statement of cash flows, the most recent quarter, had a lot of free cash flow. If you look at it, they generated $828 million in free cash flow, and they didn't have any CapEx because I believe they expense all their purchases rather than capitalizing them. So it's good to see that the company generates so much free cash. I'm not using that run rate, in free cash flow, just give the valuation of this company. It would just be too high because they are volatile. They've had negative cash flow and then positive cash flow. But it's very good to see that their most recent quarter is doing well. Valuing a company like Robinhood is a little tricky. They're not profitable, so I can't use the earnings per share valuation method. Their free cash flows are a little erratic. They're a young company. They're a high growth company. So what I did is I took a very conservative approach and used my model as a framework, but I really, again, use conservative numbers. I'd like to take you through that. First, I'm using the free cash flow method, as well as a 10x sales method that I'll explain in a bit. First, free cash flow. As mentioned in Q1, they generated over 800 million of free cash flow. But what I want to do is I want to take a more conservative number, which will be $300 million in free cash flow as a starting point. And I'll say that they're going to more than produce that in 2023. So that'll be my starting point. Based on those numbers, I'm going to grow years 2, 3, 4 by 25%. And I think that's very doable, high growth company. And then 4% after that. I think that's conservative growth rates. I'm going to discount those numbers, valuation of those numbers by 11% as a weighted average cost of capital. And using those numbers, I get an intrinsic value of their free cash flows that I expect in the future of $6.4 billion. They have $5.45 billion of free cash on the balance sheet already. So I had that in there, and the valuation I have is almost $12 billion, but their current market cap is a little under 10 billion. So there is a little bit of a discount using a very conservative approach, using the free cash flow method of valuing this company. So that looks interesting. Now, I cannot use earnings per share because they don't have positive earnings per share. So I'm going to take a 10x sales valuation method that I thought I'd be very comfortable investing in. And this is my logic. I believe in their business. I think that they're doing a really nice job. They're very innovative, very creative. So this type of business, would I buy it for 10x sales? Absolutely. I think it's going to be worth 40 to 60x sales, especially as they near profitability. So 10x sales would be probably my minimum valuation. And if I use that, if I just multiply their sales by 10x, the valuation of the company is $13.5 billion. So I use that as a secondary valuation method here. I blend the two, taking 2/3 of the valuation from free cash flows and then 1/3 from the 10x sales. And I get about a 28% discount on a very exciting company that I think is really changing the brokerage financial services industry. And that's how I came up with my valuation for Robinhood. Now, Robinhood stock has gone up and down, but it's doing really well year to date. It's up more than 33%. I started buying around this zone here, and I'm up 20% on the stock just in a very short period of time. So great investment, so far. And I'm going to keep buying shares. I think it's a nice company. It hasn't been a big investment. It's one of my bets, but it's a smaller company, so I don't bet the farm on it. I've gone in with a good size position, and I'm feeling comfortable that I want to increase the position. Love to see one more earnings call, and then I could really get more comfortable with the company and continue to invest over time. All right, just to recap Robinhood performance. This is a great company in creating products. They have been a very good innovative company, and they're not stopping. I think they're going to continue to create, products that people really appreciate. And, quite frankly, I think they're out creating the rest of the industry as it pertains to their particular segments. They generate good free cash flow, and they have no debt, which is very good. They're growing revenues, which is awesome. And we have an up market in 2023. So I think, there's going to be higher investment, really, because as you see stocks going up in value, especially those big cap tech stocks, it really brings individual investors back into the market. And that's where Robinhood really makes a lot of money, is that individual investor, especially the younger one. As we look at 2023, I'm expecting that they're going to continue to grow at a very good rate. They have low capital requirements to grow. It's really their innovative ideas that help them grow. They don't need a ton of capital to grow. And their new products are succeeding. Their products are, these guys know how to create the right products. Their products tend to work. And frankly, the brokerages that I do business with, they haven't changed a whole lot over the last 20 years. It's kind of a breath of fresh air to see Robinhood operate in the industry. My outlook, they'll continue to change the industry. It'll be interesting to watch them. They'll continue to have high growth. And I believe that this could be an acquisition target to one of the big major financial services companies, like a JP Morgan, Bank of America, somebody who's huge that really wants to, take Robinhood and have that company serve that younger segment of the population, younger segment of the investing industry. I think it'd be a very good acquisition for one of those companies to pick up. All right, so revisiting my scorecard, I really do believe in this company. I think, financial services, fintech, it's an industry that I've made money in and I want to be a part of. So I really like Robinhood. I want to be an owner of this company, and I like the industry. I think Robinhood is arguably, especially for what they're trying to do, the best run, company in their segment. They have no debt, so no problem with debt. I'm getting a discount on the stock. So I'm going to continue to buy shares in Robinhood, study their earnings releases, very closely to make sure I want to continue to be an owner in this business. So that's my video on Robinhood and reasons why I invested in Robinhood. I hope you found it interesting. Keep in mind, this is never investing advice. Please keep in mind, this is for entertainment purposes only. I like sharing my story of my investments, and that's all it really is. Good luck investing in 2023, and thank you for watching.